welcome to Value Research Podcast. You're listening to First Page, a column written by Dhirendra Kumar. The Market Noise Machine. Panic sells, but Indian investors aren't buying it. Amidst the recent stock market turbulence, a curious phenomenon captured headlines: the so-called decline in systematic investment plan inflows. Social media platforms buzzed with dire predictions that investors would flee mutual funds as the market experienced sharp corrections. This narrative, amplified by the digital engagement of farmers, painted a picture of panic and retreat. But what does the data tell us? In February and March 2025, monthly SIP inflows decreased by 1.52% and 0.28% respectively. To the untrained eye, or perhaps to those with vested interests in generating clicks, these figures might seem alarming. However, when placed in historical context, they reveal something entirely different: remarkable resilience. Consider this. During the COVID-19 pandemic, a far more severe crisis, we witnessed 7 consecutive months of decline from March to September 2020, with inflows dropping from 8,641 crore rupees to 7,788 crore rupees, a much steeper fall than anything we're seeing today. Even then, the core of Indian investors maintained their discipline, and those who stayed the course were handsomely rewarded. The recent decline appears even more insignificant when we examine the extraordinary growth trajectory of SIP investments. From a modest 3,122 crore rupees in April 2016 to 25,926 crore rupees in March 2025, an astounding 730% increase in just 9 years. Within this journey, monthly fluctuations of 1 to 2% are mere statistical noise. What's truly remarkable is not that SIP investments occasionally dip. They certainly do and always will, but that, despite volatility, corrections, and relentless fear-mongering from various quarters, the overall trajectory has been overwhelmingly positive. Even the most recent 4-month period, which some commentators portrayed as a crisis, falls well within normal statistical variation when measured against historical patterns. The reality is that a significant percentage of SIPs have continued through market fluctuations, and as subsequent market movements have consistently shown, those who maintained their investment discipline during downturns positioned themselves perfectly to benefit from the inevitable recoveries. Conversely, those who allowed themselves to be frightened into stopping their SIPs did the one thing guaranteed to worsen their returns. What we are witnessing isn't a story of investor panic, but rather one of investor maturity. The Indian mutual fund investor has come of age. Years of market education, combined with the tangible benefits of disciplined investing, have created a new generation of investors who understand that market volatility is not just normal. It's necessary and ultimately beneficial for long-term wealth creation. The data speaks volumes. Even after the much-hyped decline, monthly SIP investments in March 2025 stood at a robust 25,926 crore rupees. Compare this to March 2020, at the onset of the pandemic, when the figure was just 8,641 crore rupees. Or go further back to March 2017, when it was merely 4,335 crore rupees. The growth has been nothing short of phenomenal. Perhaps the most telling aspect of this story isn't about the investors at all, but about those who profit from manufacturing panic. In a world where engagement metrics drive revenue, fear remains the most reliable currency. Market crash, investor exodus, and SIP collapse generate far more clicks than investors remain disciplined or long-term growth continues. So the next time you encounter breathless headlines about investors fleeing the market or SIP inflows collapsing, remember to look beyond the noise. The data tells a different story, one of resilience, growth, and increasing investor sophistication. The Indian mutual fund investor has learned the most crucial investment lesson of all. Sometimes the best action is no action at all. Well done, Indian investor. Your steady hand and disciplined approach in the face of market turbulence represent a profound transformation. By ignoring the noise and focusing on the long game, you've positioned yourself on a remarkable wealth creation journey. This newfound maturity, this ability to see market dips as opportunities rather than threats, isn't just commendable, it's the very foundation upon which generational wealth is built. Keep at it, for the greatest returns often come to those who simply refuse to be frightened out of their seats.